Hi everyone. So in today's trading psychology video, I'll be discussing about the four fears of trading. So I ran a poll on my Twitter in which I asked the followers like which emotion is toughest for you to control when trading. So I got almost like 1871 votes. In that 45% said fear. So fear is a predominant emotion which most of the traders are struggling through. So 22% said greed, 33% said hope, but fear is something which is which is predominant among all the traders. So I did a little bit research on fear part, and this is what I came through. So there are basically four fears of trading: the fear of losing money, fear of missing out, fear of being wrong, and fear of leaving money on the table. Now, at the end of the day, fear, greed, hope, these, as you are human, they are part and parcel of a human being. But what we need to focus on is how we cannot get rid of these fears, or these emotions. They are part and parcel of us. These emotions helps, I mean, if these emotions are used on a proper way, they can also help in improving your trading. I mean, that is something which I'll discuss in some other video. But as of now, what I would suggest most of the traders are, don't consider emotions as your enemy. Emotions are very well required. Emotions are very important for you as a trader, but we should know two things: which emotions to ignore and which emotions to take by our side. So that is why fear is something which most of the traders told like they are suffering from. So basically there are four kind of fears. We'll discuss what are those fears. So once you understand, like, am I having a fear of losing money, so then it's something like this: prevention is better than cure. Like, you don't know now like what fear you're suffering from. Once you know the fear I'm suffering from is this, then obviously you can take proactive steps and make sure that once that fear emotions is getting triggered, a proper mechanism is there, a proper protocol is there which can be used to control it. So we'll discuss all the four fears in detail. The first fear is fear of losing money. Basically, you, me, anyone who comes to the market, they don't want to lose money, you know. But losses are part and parcel of the trading game. That is the sad truth here. So there will be the losses, but because there is no holy grail in trading, there is no single holy grail that if you do this strategy, you are going to make a lot of money. That is, that is just like that is just like an imaginary thing. So holy grail doesn't exist. So what you need to understand is trading is a game of probability, and every trade has a 50% chance of winning. I mean, you buy, you sell. Yes, there is a 50% chance. I mean, trading is the only profession in the world where your probability of making money is 50%. Like, if you are a businessman, to succeed in business, it's very difficult. I mean, if I've seen 10 people starting a business, only two or three will succeed. There also probability is less than 50%. So trading is the only profession where the winning percentage is almost equal to 50%. Losing trades, frequency of which will be based on the historical probability of the trade setup, assuming those probability holds into future. So basically, all the trades which you do, I mean, there are two kind of trader: one who trade based on their emotions, one who trade based on their instinct. No one can help them out, because till their luck is running, they're going to make money, and one fine day they're going to lose out everything. The other set of traders are systematic traders who trade based on a particular trading system. And these systems, so when I am trying to run, or I'm trying to trade on a particular system, it's always good to backtest it at least 2 to 3 years down the lane, so that you cover all kind of markets, whether it is trending, it is sideways, it is volatile, and you know what is the probability of winning of that system. At least, okay, 40% of the trades will win, 60% of the trade will win. So at least you are mentally and prepared and financially prepared. Okay, 40% of the trades I'm going to lose money, and I need, and once you ascertain that fact, yes, I'm comfortable with it, then only you should go ahead and trade that particular system. So loss aversion promotes irrational actions of cutting trades prematurely and holding on to a losing trade, both actions done in service of avoiding losses, not what is the best for the trade. So basically, you do loss aversion, like I've discussed, like you don't want to lose. And once you are suffering from loss aversion, there are two things which you can do. Either you cut your trade, as soon as you see profit, you'll cut, and the same trade goes and become a big winner. or you hold on to a losing trade hoping that the trade will come back. So this is about fear of losing money. So if you are suffering from it, there are two things which you can do. First thing is get a proper trading system, get a proper training, either develop a system on your own or learn a system from someone who is more experienced than you, who has seen all blues and greens in the market. And second thing is, if you are suffering from the hope that my losing trades will come into profit, so you need to improve on your trading psychology. The second part is fear of missing out. It is basically, if I don't get in now, I'll miss the move. Like I've drawn an example. I think this is of Reliance Capital. The stock just rallied as soon as it opened. My entry was somewhere near 200 or something, and the stock just opened and just moved up very drastically. So the traders who saw it, I mean, obviously the new traders, they will think, oh, the stock is just running away, so I should just get into it. So probably there's a highlighted part, the blue part, this is where most of the traders enter, and that is basically the top of the market. You can go back, I mean, whoever is seeing the video, go back, see your trades, and probably you would have done this mistake. This is basically what we call as fear of missing out. If I don't get it now, I'll miss the move. This particular emotions or this particular feeling, I don't get it now, I'll miss the move, causes the trader to jump into an unplanned trade. My entry was 200, but I'm entering at 205. I'm increasing my risk, I'm reducing my reward, and I'm entering with a very big position size. As the trader sees the market begins to move, an impulse, market begins to move against him, the impulse arises within your body, and you just take a reckless trading decision. And this reckless trading action is basically responsible for bigger losses. So if you see here, from that day, that the second candle was the top, from there the stock is falling. So fear of missing out occurs near the top of a market. Traders on the sidelines have watched the market rally and rally. It has gone higher, and they are not on the board. Other traders are making money, but they are not. Frustrated and fearful of missing out further gains, they either leap in as a market is in final advance, or they buy on the pullback after an exhaustion or a climax. Either way, they are soon under the water. So very, very important point. So basically every trade you are entering should be a plan. You should always remember there are opportunities every day. Opportunities are there every minute. If you miss one opportunity, you will again get another opportunity. So never ever enter a trade without, which first thing is, never enter an unplanned trade. If the trade just you miss the move, like many traders who miss the move in the March month, they're entering now, and what is happening? Market is not going anywhere. It's just sideways move, and they're getting whipped out both sides. So yeah, it's very, very important that wait for the right entry. If you miss an entry, wait for the next entry. At the end of the day, your main goal is never to make money. During my trading courses also, I specifically highlight on this point. Never ever enter market with the thought of making money. Try to build a process and follow a process. Once the process is set up, the process is in, money is just a byproduct. Fear of being wrong. This is one of the biggest trading fear most of the traders have. Traders will admit that being wrong is one of the toughest fear for them to overcome. And this is something, it is inherent in us from the day we are born. Because every time you do something wrong in your life, you are reprimanded by your parents, by your teacher. No one appreciate a losing person. So if you have lost something in life, everyone will say, oh, why you have done this, why you have lost it, you should have done this, that, but no one will appreciate. But in trading, if you are wrong, you should appreciate your decision, because the process here is you are protecting your capital. When a trade hits your stop loss, you are protecting your capital, and that is their oxygen. This is what is required for you to survive in market. They can imagine in their mind's eye what their spouses, trading friends would think of them when they are making a losing trade and lose money. The fear of being wrong can cause erratic trading actions, such as holding on to a losing trade far too long, cutting winning traders short, moving stops, adding to a losing positions, or jumping into the market for an unplanned trades. It is a tough way to trade. Failing to pull the triggers, moving stop loss when it is approaching. So basically, these are the things which most of you have done. I have also done, when I started trading. But yeah, this is part and parcel of trading. Once you should never be fearful of being wrong, because losses are part and parcel of it. When in the very first, the first year, when I told you, you should follow a system. So when you are back tested, out of 60, out of 100, 10 trades, 6 will be wrong, 4 will be right. So you are preparing your mind to accept losers. And once you accept losers, then trading becomes very easy. Why? Because you have taken an approach, you have set up a proper risk to reward ratio. So much individuality is there in a trading. Trading is an individual profession. So you need to, basically train your mind that losses are part and parcel of the game. And this is a genetic thing, because it has come from the way the humans are born. So no one, your society will never appreciate a loser. But as a trader, as a successful trader, losses are the only thing which will protect you. Because once you start taking losses in a proper manner, you will first protect your capital. You will have a trust on your system, and when the profits come in, you will be able to write the move. You will never cut the trades on a premature basis. And the last fear is fear of leaving money on the table. Basically, I've seen many traders that once their target is achieved, but still they hold on to the trade because they think I'll make more money. Overstays is trade, expecting them to produce very large moves. Increase position size after a few winning trades. This is what has happened. I mean, 3 or 4 of my students, I was talking, they made very good money in March month. And eventually they increase their trading size because they think they have learned the art. I mean, it's not learning the art. Basically, the market were trending. Everybody who was on the right side was making money, and they eventually doubled their trade size. And with the last week, the last 5 days, market was just within a range. They lost heavy money because they made money out of their luck. They never had a proper risk to reward mechanism, no target, no stop losses, and they were just trying to write the move. And here, when market goes in sideways zone, your trade size is double. You end up losing more in what you are willing to lose. And that is where you start taking erratic trading decisions, and you end up losing even more money. Big wins were responded to with euphoria and unwarranted confidence, neglecting the profit target, ignoring market signals of closing the trade, because now you have made so much money in such a small period of time that you ignore. You think that you are the best, you are on the top of the world, and you end up ignoring even the market signals, following the basic process which is required for you to trade. And that is the fear you have for leaving money on the table, and you end up losing big money. So this is one of the quote by Mr. Marty. When I was able to separate my ego needs from making money, when I was able to accept being wrong before admitting I was wrong, was more upsetting than losing money. I used to try to think, to will things to happen. I figured it out, therefore it cannot be wrong. When I become a winner, I said, I figured it out, but if I'm wrong, I'm getting hell out of it because I want to save money and go on to the next trade. By living this philosophy that my winners are always in front of me, it is not painful to take a loss. I make a mistake, so what? I make a mistake, so what? I mean, if I'm making a mistake, I'm losing a part of my capital, which is manageable, that is fine. But if I'm making a mistake which is unrepairable, then that's a big, big problem. So I would, as weekend is coming and the next week there are, trading holidays, I think the trading should remain light. So basically spend this time in going back to your trades, see which trades were warranted by fear, and what fear out of these 4 fears, which one you are suffering, and take the corrective steps. So do this, and wishing you all the best. Thank you.